So Clement, since you already entered the commercial real estate field and did a transaction by yourself, and also you are studying and you're doing lots of research on commercial real estate transactions like listings. Can you tell us some examples like what are considered good investment targets?
Yeah, I think everyone has. I wouldn't say everybody has their own individual criteria. I know I've got my criteria. A lot of it I learned from you. A lot of it's just kind of canvassing the opportunities that are out there. There's a few that kind of stand out, right? And so when looking at a commercial real estate opportunity, for us, you can look at it from what operators are there, which are recession proof. So one thing I'm always looking for is things that are recession proof, things that are pandemic proof, and that'll kind of give you an idea of the type of asset class you want to get into, the type of operator that you're looking for. That could be either, in our mind, medical tends to be more recession proof, tends to be pandemic proof. Veterinary services, same, it's what people want. High demand for a lot of these services, regardless of where it's at. You look at it from trend analysis. Where are the trends going in the future? So if you're into automotive, well, okay, there's opportunities there too, because look at it from things that could be EV proof. Where is some of the market analysis going as far as existing automotive services, and are they actively adjusting to changes in the environment, both in the country, globally, and that kind of gives you an idea where the opportunities lie. Okay, well, you can dig a little bit further in, and you'll probably add to some of this because I learned this from you, which is when you're looking at the operator, you're looking at previous owners. How much investment did they put into the property? And so if they put a lot of capital expenditures into the property, that tells you a lot about their commitment to that location. And so you can take a look and say, okay, I got a chance to look at maybe 10 to 20 year leases. Well, those are great. Those are fantastic to know that there's at least a long-term commitment based on what kind of lease they're willing to sign. Okay, well, let's say that lease starts to run down, but the operator has shown confidence that they're intending to remain. They may put additional capital expenditures to the interior, the tenant responsibilities, and because they put in that investment, then even if a lease is running low, that they're probably going to renew. They'll probably sign an extension, and that is a good tenant, that's a good operator, and that's probably an investment that's worth looking into and considering for purchase.
Yeah, actually, lots of beginners in commercial real estate, they only look at the surface, cap rate.
Yep.
Yeah, price. A lot of real good listings are under disguise.
Yeah.
It is a diamond under the sand, inside the sand. You need to, dig it deeper to find out what is the real gold or the real piece of diamond. You cannot just look at the price and the cap rate and make a decision. You need to know a lot of risks are hidden.
Yeah, I think that's where good at real estate advisor, commercial real estate advisor is going to advise you. They're going to look that much deeper. They're going to peel back the onion. They're going to provide a little bit more information that is not necessarily readily available in the offering memorandum. A lot of that is a brochure. It's what the seller's agent's going to want you to see that highlights the all the good aspects of things. A good commercial real estate advisor is going to reach out. They're going to touch base with the seller side and get a lot of these details. And from experience, even if they didn't get it, can tell just by looking at how a offering memorandum is structured based on cap rate, based on asking price, based on just some of the nuances in wording in there, and know exactly what the seller side strategy is in order to make that property marketable. And so there's a little bit of nuance that is different than residential real estate, where residential real estate, you may look at location, is it close to a school district, things like that, based on asking price and, market value, comps and so forth. That same strategy in residential real estate is not necessarily the same when it comes to commercial real estate. You can look at generally comps, but at the end of the day, you're also looking at all the other unknowns. And I think that's where, I've relied heavily on you. That's where we provide, as far as for investors on the buy side, some of that experience, so that when we look at a deal, it's coming from a lens of experience, so that we're digging that much deeper, just so that, is this a diamond in the rough? Is this something where somebody's not seeing the opportunity on? Because, in the OM, it may not say, oh, well, roof has been replaced by, or a lot of capital expenses have been, and improvements and renovations have been made by the tenant that show that they want to stay, or there may be other hidden risks that we would, advise to steer away from.
Yeah, it's actually, experience is very valuable and priceless in selecting commercial real estate targets. So very, very important. A lot of people, they just cannot see, because from their experience and their standpoint, they couldn't see what they don't know. Yeah, you don't know and you don't know. Yeah, so a lot of times, sometimes they get into arguments and conflicting opinions over a certain deal, because what they see is not what I see.
Right.
A lot of times, just like there's a Chinese story. I don't know if English has the same, similar story. The story says, 5 blind people touching the elephant.
The elephant, yep.
Yeah.
Yep.
So if you stand by the ear of the elephant, then you can argue that the elephant is like a piece of fan, fan. And if you stand by the trunk of the leg of the elephant, you would think that it's like a pillar.
Yeah.
Right? And if you against the back of the body, the flat part of the body of the elephant, you would think that the elephant is like a wall.
Yeah.
Right? If you touch the tail of the elephant, you would argue that the elephant is like a piece of rope, like a thick string. Everybody is correct, by their standpoint. Everybody is actually correct. But the only good solution or the only good decision is based on the whole picture.
Yep.
Yeah. If you only see partial of the object, you can never come up with a good decision of what to do. It's exactly like the 5 blind people touching the elephant. A lot of times I acknowledge that their argument is correct from their perspective, from their standpoint. But the problem is that if you don't have enough experience of an elephant, you can never give people a real picture of how an elephant is like.
Makes sense.
That's when a mentor can play her role. I I'm always very confident just because I see more. I see the whole picture of the elephant along those 40 some years of experience.
Right.
Like I experienced lots of ups and downs and even step into some pitfalls. I will share some like painful stories with you, in future videos. But a lot of times, I just want to advise investors, especially beginners, don't look at the surface of a deal. Look inside. Look what's hidden. When I pick a good commercial real estate listing, I go by not only the price and the cap rate, I focus on how much the tenant invests into this location, and if it is easy for them to relocate.
Yep.
Yeah, if they tie down to this location, they have no way to relocate and keep the same business model. That is a good choice to invest.
Yeah, you're not wrong. A lot of times you can dig in further and say, how long has that practice been there? Are they inheriting the practice? Is this a family practice that's been passed along? Do they have established, clientele that's in there that is dependent on that? How saturated is the market? And so if there's opportunities to look at many different perspectives of this and say, how do you underwrite the risk, for the investor? And so one of these is a way to look at it. And so I would say part of this process, if you're jumping into this, is knowing that if you have an idea, we'll help you look into it, and we'll provide perspective as far as whether it's worthwhile or not. Good, bad, or not, it's a learning process both for the investor as well as is for someone who's advising you, because what we don't want to necessarily do always is go, hey, let's entertain only good options that you're going to close on. Let's look at it so that you become an informed and educated investor, so that it meets your goals. Part of that is it's not our goal, it's your goals. Like where do you want to be, and the guidance and the mentorship and the experience will get you to that point. And so sometimes we get deals that seem too good to be true, and sometimes they are too good to be true. Sometimes they are exactly what they are, based on where the market fluctuation is, and maybe you're getting in at a good time. Sometimes we'll look at those deals and we'll underwrite it, and we'll get a little bit of more details as we're talking to the seller side, and we get a little bit more perspective, and we could better advise and just say, hey, yeah, these numbers are too good to be true, but it's not a bad opportunity, maybe a long hold opportunity. And so kind of go back to just understanding where the trends go, and that's where we help you understand. And also understand whether an area is either too saturated or not.
Yeah, just this morning, like before we record this video,
Yep.
I replied to one investor about the two listings that she sent to us. One is the oil change.
Yep.
The other one is the auto parts. I replied by telling her that the oil change, it's going downwards.
Yep.
Because with more and more EV in the market, and eventually dominate the auto market, then the oil change business would be less and less.
Yep.
So it is, I call a sunset business.
Yeah.
I'm always looking for sunrise business. That means it's the starting of its business cycle. It's going into its prime time,
Yeah.
before it goes down.
Yeah.
But this oil change business is actually going downwards. Then another listing is auto parts. Even though it's a chain store and it has the corporate guarantee, but the tenant's investment is very light.
Yeah.
It's some shelves.
Yeah, it's retail. Retail tends to be a lot easier because there's not a lot of actual commitment.
Yeah, it's very easy to just move and relocate to anywhere. Even though auto parts is an evergreen business, even though EV, you need auto parts, right? Gas car, you need auto parts. Hybrid, you need auto parts. But may not need auto parts from this specific location.
Yeah.
That's a problem. If you buy this location, you buy this store, and they, just invest like a few tens of thousands to install those shelves, and they can move right away. In 1 hour, they relocate the store to another structure. So that's the risk. That's a risk. It's easy to relocate. You must find something that it's very difficult or even impossible to relocate.
Yeah. I would say that if you're an investor, and you're looking into transitioning into this market, some of your own personal experience is always helpful. It's just like if you're trading in the market, it's what's trending, what people are interested in, but you also have to be aware of what is short-lived and what has long-term potential. And so, it's easy to look at what you do, look at what you're familiar with, and if you're in the medical field, then it's comfortable. It's a playing ground that you've played in before. You understand the ins and outs of it potentially better than most others, and so you have some inside knowledge. And sometimes inside knowledge is always great because it's something that helps you already underwrite the opportunity before it even comes in front of somebody like us. And so where we come into it is, well, do you want to diversify? And we can help you with what you're comfortable in, but there's also, you're missing 90% of the opportunities as well if you're just focused on your comfort zone. And where we can help is, bring things up that you're thinking about, and we'll help you underwrite it, and we'll let you know based on experience whether it's a worthwhile investment or not, because there is opportunities that are abound.
Yeah, actually, I have my own direct experience. For example, I have a tenant, a Starbucks tenant. I purchased this property in 2007. Now it is 19 years. Yeah, Starbucks already renewed 3 times with me. Like every 5 years, they renew once. Plus 2007. Right now, I have Starbucks as my tenant for 19 years. They just keep renewing because it's very hard to relocate.
Yeah, and Starbucks is popular. I mean, it's one of those coffee giants right now that new startup coffee companies are competing against, and so those are riskier just because they grow fast, but you don't know how stable are. Starbucks as a whole is well established, and so there are stories of that where you can get into a corporate I would say entity and chain like that, or if that's within your wheelhouse, then you're comfortable with that. That's definitely something that can help.
Last year, 2025, I recommended a Starbucks in Wisconsin. It is close contract already, so it is very promising. I'm looking for a long-term stability, because if you want long-term passive income, you must make sure that the tenants stay there, right? If they leave, then it takes a long time to fill the vacancy.
Yeah.
You know, it's not that easy. So that's why we need to look for something that the tenant can stay there for a long time, even not forever. So a lot of times, this business has a longer lease than my life, actually.
Yeah, I think that's where the confusion sometimes comes, is like, just because it's the corporate goal to be profitable, scale, and they may have done the research as far as where they will establish a location, may not necessarily be your strategy. And so there's always a difference of knowing, okay, is a corporate entity is not necessarily in your best interest, but your best interest is to be an investor, long-term investor, and get your return on investment. Their strategy is going to be very different than yours. So part of that is just understanding the market trends and understanding some of the ins and outs before committing to a property. And those are things that we look into as well, just to make sure that this is something that is what we call investor grade property.
Yeah, I have another tenant. It's a dental facility in Brooklyn, New York. Actually, on that street, Bath Avenue, there are a few like empty stores for rent. Those rent is about $2,000 per month. But our store, same size, only 750 square feet, small store. So our current rent from this dentist is, I think should be 5,000 this year.
Wow.
Yeah, up to last year, 2025, it's already 4,950.
Wow.
Yeah, and their 10-year lease will expire in June of 2027. They already extended another 10 years, like from 2027 to 2037.
Yeah.
Because they want to, renew a long lease, so they feel like more stable.
Yeah.
Because their facility, their investment into the dental facility, it's big investment, and also plus their invisible value, their patient accounts. Patients always come back to the same dentist generation after generation. Like grandparents would bring the grandchildren to the same dentist, and then they bring their next generation. So this value, the physical value, and the hardware, and the invisible value, the software, together is actually more valuable than our physical property.
Yeah, absolutely.
That's why, even though next door is leased for $2,000, which is not even 50% of their rent, but they cannot move. There's lots of infrastructures, like underground, those compressor, those whatever underground piping and wiring. They cannot
utilities.
move next door. So that's a real example of those long-term stable tenants, for our commercial real estate investment, as a very important factor to consider. Yeah. If you don't have this kind of experience, you don't know. You would think an oil change business, an auto part business, and a dental office business, you might think the other two is better than the dental office if you look at the cap rate.
Yeah.
So actually, a lot of times, if you look at the current cap rate, which is not super, but you need to think about it. There's an annual increase of rent.
Oh yeah.
Yeah, like usually 2 to 3%, very popular for 3%.
Yeah.
So in a few years, your cap rate would be much higher.
Yeah.
Without you even realize it.
Yeah, absolutely. Those rent bumps are very helpful with increasing that cap rate, and sometimes you're looking at the numbers from the first year that, you know, for rent commencement when you sign the and close on the property. Well, in short order, you're going to get the cap rate that you want, and so you kind of have to look beyond just what's on the offer memorandum right off the bat, because the numbers may not be there today, but in less than a year, you know, it'll get to where you want it to be. And so that's just kind of looking forward and not just looking what's in front of you. I think that's what you're trying to get at.
Yeah, I have so much advantage investing into commercial real estate that, you know, hands off. I have freedom of time, you know, freedom of finance, and freedom of almost everything.
Yeah.
You know, that's why I actually enjoy my life very much.
And just, you know, like some of it is not just when you look at our property, you know, some of the assets that we're looking at, operators, different operators in different facilities, you know, are very different in regards to risk. And so you can have a single tenant property that is fee simple, or you can have, you know, the same operator in a condo association that adds a little bit more nuance, you know, but based on how the lease structure is, it could be just as safe as well. But those are things to consider, and they're all good opportunities as well. And so that's something, again, that we can help you understand the differences, things as far as your risk tolerance looks like. You know, one's more ideal than the other, but again, it's one of those things that all these high desired assets, everybody else is looking the same thing. And so when you come across one, more often than not, somebody else is looking at the same thing and somebody else is looking to put an offer in. It's just like, you know, looking at a house that you really want. Once the opportunity is available and the underwriting makes sense, you know, you kind of have to jump on the opportunity once it's available to you. When we bought our property over in Arizona, it was exactly what we're looking for: an absolute triple net dental practice in a city and a state that we wanted to be in, and it would just hit the market. And if we weren't aggressive about it, we would have lost that opportunity to somebody else who saw the opportunity just the same way, because the underwriting at some point is all going to get to the same, and people are going to see the same opportunities the same way you see it. And so I would say strike while it's hot, usually. And if you wait too long, somebody else is not going to wait. They're going to see it and they're going to move forward, and they're going to have done that, you know, mental math and underwriting before you do.
Yeah, actually, in a short video, it's very limited, you know, time limited, content limited. If you really want to try to enter this commercial real estate field, which is completely new world to you. So if you want to learn, we are willing to teach, and it's for free. You know, all this information, everything is free for you to get, and it is priceless and valuable, very valuable. Yeah, a lot of people just cross this bridge. Our experience is the bridge that lead you from point A to point B. So reach to us, leave your comments and your contact information, and then we'll start from there.
Yeah, makes sense.
Okay, thank you.
Thanks,
Yeah.
appreciate it.
Yeah, see you next time.